Welcome back. You're still tuned into Midcap Radar. Mold-Tek Packaging, that is the first management on our show, reported good set of Q1 numbers. Revenues jumped 22%, driven by healthy demand across all segments. We are now joined by Janumahanti Lakshmana Rao, who is the CMD at Mold-Tek Packaging. Mr. Rao, good afternoon. Thank you so much for joining in. It's been a good set, and you have guided for volumes of around 12 to 15% and revenue growth of 18 to 20% in FY26. Which segments will drive this? You have three segments that you cater to. There's a new one as well. Can you break it up for us? What is the demand like in all three of them?
Yeah, paint segment is contributed handsomely this quarter. A more than 20% growth we witnessed in the paint segment, followed by Pharma and Food and FMCG, which are our main contributors towards a better profitability. So all these three have crossed double digits, and they're in the region of around 15-16%. Overall, the growth in volumes is around 16.9% compared to the Q4, but the sales are up by almost 19% revenue-wise. So that indicates the margins are expanding thanks to the better product mix.
Okay. Mr. Rao, the other question is, as far as the lubricant space is concerned, this particular quarter, it has seen, some pressure. Rest of the year, do you expect that particular segment to continue to underperform? And going forward, do you expect pharma and paints to lead? And could you quantitatively give us the kind of volume growth you're expecting there?
The loops is always a stable trajectory. They never shoot up or go down drastically. Due to the unexpected rains in May, consumption of lubricants, even ice creams and yogurt have fallen drastically, leading to a negative growth in lubricants compared to the Q4. But compared to the Q1 last year, there is a minor growth. So that indicates that the trend is neutral in loops, which is always been expected. And I think it will start improving because of this setback in May and June. Probably from second or third quarter onwards, lube companies would pick up volumes. Coming to the growth parameters, I'm really excited about the pharmaceutical prospects. Several companies have approved our facilities for trials and commercial orders. Very few commercial orders have started in, but the numbers have already crossed last year Q4 numbers by around 11%. And we are looking at a much stronger demand for our pharma products in the coming quarters, because more than 10 to 12 companies are using our products in trials and machine trials and stability tests. And I hope that even few of them get cleared. Quarter on quarter, they will be adding numbers, and we will be crossing our targeted 35 crores projection for the current year.
So 35 crores for FY26 and 50 crores for FY27. Is that something that you'll achieve? You had indicated that in Q4 conference call.
Yes, we'll be aiming to go beyond 50 crores next year. Probably it will be somewhere around between 50 to 60 crores next year, because there's quite a bit of traction. And as I can expect, 3 to 6 months time for the demand to really turn into commercial orders. By fourth quarter onwards, we can see the sales running into double digits in crores. So for next year, our target would be in between 50 to 60 crores.
Mr. Rao, so, with this particular guidance that you have given, so are you saying that this does not take into account some of the ongoing discussions that you have with the companies? And in case that does fructify, you're saying there is an upside risk to these projections. Is that accurate?
Yeah, 35 and 50 crores are certainly given.
Okay.
There could be an upside if few of our plans happen.
So another question, one key metric that analysts track is the EBITDA per kg. In the current quarter, it's at a little over 41.5 rupees per kg. Can this sustain? We understand that this is towards the higher end of the range that you typically operate at. Can this sustain? And going forward, what is the target that you have?
Yeah, as you can see, in the last 10 quarters, we have never crossed 40 rupees. And we are above 41.5. And it is a better quarter. Q1 is always better for us. But May has been a dampener to some extent. Otherwise, it would have been still better. So I'm hoping the other 3 quarters also will catch up, because of pharma adds at a much higher level of EBITDA. So probably we can still aim at 41 in this year, if not more. But it can further improve as our pharma and FMCG sales grow up. As I mentioned in my Q1 call, our Panipat is starting food and FMCG products in August middle, from August middle. That will start adding new markets and new segments for us. And those numbers will start adding in the third and fourth quarter. So that's why my confidence to stay around the same figure in EBITDA is possible in spite of low seasonality in second and third quarters. Probably third and fourth quarter would further improve if our plans in pharma happen, as per the demand, it seems like.
Take that point. Actually, I was going to ask you, the next question was going to be on Panipat, but since you already answered that, we would leave this conversation on this note. Thank you so much for joining in. The Street likes what you're saying. The stock is up 4% as we speak. With that, we'll get you a reminder for all our viewers as well. Unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Access. Our premium members only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.